agree to the point that the demand has shifted from Bangladesh to India. I would not be sure about India coming up to that level of expectation. I think there is a lot of support which is anticipated by the industry from the government. Has been a very clear message to them now that you need to buy more from India and
Okay.
reduce the Chinese supplies as soon as possible.
Wow. This year you raised around 325, 340
342,
crores.
yeah.
342 crores.
Yeah.
Debt is zero. So what are you going to do with that 342 crores? Yeah, this question answer. What's the biggest challenge Indian chemical manufacturers face today? That's a good question.
Drink.
Starts. So we spoke about. We spoke. Fineotex Chemicals. Today we are in Mumbai speaking to Sanjay Tibrewala. This company market cap is close to 3,500 crores. The most interesting thing about this company, based on just a layman's perspective, they have done very well in terms of financial performance. The promoter will tell us about what chemicals that they do, which industries do they supply to. But before that, just on a financial bit, on the margins front, net margins and operating margins wise, they are one of the top companies. If I take the top 200, like 200 chemical companies that's listed on the market, this company would rank fifth or fourth in terms of net profit margins. And they've been doing consistently well, like top line growth, profit growth of more than 35% consistently. So today in this market, when budget was no respite and markets are falling because of many geopolitical situations, we are trying to talk to interesting companies and understand more about them, their past, their present, what is it that they're doing, positioning them for the future, what is the new sectors they are going into. So let's hear all about it from the second generation promoter himself, Mr. Sanjay. Hey Sanjay.
Hi, thanks.
Thanks for having us here.
My pleasure.
So before we understand the industry, tell me in just 3 minutes, what is Fineotex Chemicals? How did it start? What are the industries that you supply these chemicals into?
I would like to mention that we are there for last 4.5 decades almost. So Fineotex actually not only produces specialty performance chemicals, but it produces a lot of sustainable, tailor-made solutions as well as a great technical team services and support for the customers. So primarily we are into the three main, I would say actually now four verticals.
Okay.
One is the specialty textile chemicals. So textile is one of that, which has been our core business since almost 4 decades. The next one would be the cleaning and hygiene FMCG areas.
Okay.
Where we supply the solutions to the detergent makers, as well as our plants are FDA, where we supply to institutionals, for hospitals and hospitalities for cleaning solutions. The third one is the oil and gas, which is recently getting prominent for us, and also it's one of the very exciting sectors. And the fourth one is the water treatment solutions. So all in all, these are the four industries which we are catering to.
Okay.
Yeah.
Okay. So if I were to break it down for like textiles, for processing textile, maybe changing the color, maybe it was a white shirt, you want to change it to pink, there maybe your chemicals are used.
Yeah.
And secondly, you said the oil and gas.
Yeah.
Oil and gas to process oil, change into some other substance,
Right.
your chemical is used, or water treatment.
Correct.
And then one more area you mentioned.
Water
which
and
is
oil and the cleaning and hygiene.
Cleaning,
Yes.
cleaning and hygiene.
So I'll tell you about.
Chemical is a very broad term,
Right.
and there are different subcategory of chemicals.
Right.
Maybe 4 or 5. Can you
Right.
please identify them and tell in one sentence what each are, like commodity chemicals, specialty chemicals, APIs?
Yeah.
So can you just tell what these are?
Correct. So if I could like to mention on the classes of the chemicals, broadly there are two bases two main subcategories. One is the commodity chemicals.
Okay.
API is also one of them
Okay.
as such, and one is the specialty chemicals.
Got it.
Our focus is on the specialty performance chemical, which is again a subcategory in the specialty chemicals, and where the customers are only concerned with the kind of the performance which is coming on their results on their substrates.
Okay.
So broadly, these are the two categories which we call it.
Okay. So commodity chemicals and specialty chemicals.
Yes.
You are in the specialty chemical space.
Yes.
In that specialty chemicals that you make, some are supplied to textile manufacturing,
Yes.
some are supplied to oil and gas, some are supplied to FMCG.
Yeah.
Now let's talk one by one.
Okay.
So textiles, from let's say from cotton processing to making a shirt like this or like that, whichever shirt, where all do your chemicals find application?
Right.
And on a continuing on that, if a 100 rupee red color t-shirt, what would be the cost component of your chemicals in that 100 rupee cost?
Right. So as such, our company has been evolved as a specialty textile chemical manufacturing company. In textiles, basically there are four processes: pre-treatment, dyeing. Dyeing is the coloring process. Pre-treatment is the cleaning and bleaching process. Then there's a printing and a finishing. Finishing is the final texture given to the fabric.
Okay.
If it's a technical fabric, it will be a different kind of water absorbing or water repelling finishes.
Right.
So all in all, these four processes require 25 different functional chemicals.
Okay.
So these 25 functional chemicals together contribute only 3% cost to the user.
Okay.
And by the math is 3 divided by 25 is like every chemical is costing 0.15% cost. So what I want to mention is the cost per chemical is very insignificant here. Apart from that, it is very important for us to understand the kind of the processing being done, whether it's cotton, polyester, acrylic or wool, because the products will be different for every substrate. Again, there will be subcategories in that, that every substrate we have to make sure, understand the machines which are used, the process which is done, and accordingly we have to give the tailor-made solutions for that customer.
Okay.
So this is the kind of customization which we have to do in the businesses.
Okay. So in textiles, let's say after plucking cotton, then the cotton fiber, it is
then
yarn is
made,
produced.
yeah, perfect.
Then from that yarn, fabric is produced. From that fabric, final garment is produced.
Yes.
So in all these areas, your chemicals comes into the process.
Yes, absolutely. Okay. Wherever there is a wet processing being involved, which can happen at the yarn stage, which happens at the fabric stage, our specialty chemicals is required to give a particular performance.
Okay.
And these are tailor-made solutions.
Okay. And despite it being in all these areas, let's say 100 rupee is the cost of the manufacturer making that red t-shirt like I said. But 3 rupees is for the chemicals.
3 rupees is for the chemicals. Okay. Total number of chemicals is 3 rupees.
Total, the 25
the 25
chemicals that you're supplying?
So it's like 15 paisa per chemical.
Wow. Okay.
So it is almost like the salt of the food, and that's why there is a very high entry-exit barrier in our businesses.
So if it is such a low value, what if something goes wrong? Is it that some new player can come and do the same chemistry that you're doing and supply to clients because it's of low value?
Yeah.
Or is it that you have some advantage over the newcomers?
Correct.
How does it work?
So importantly to mention here, the risk-reward ratio for a consumer to change the chemical is not so feasible actually.
Okay.
Because there is a lot of risk of spoiling the fabric and textile itself.
Okay.
And if something goes wrong in one of the 25 different chemicals, the entire fabric can get affected. There can be silicone spots, let's say in the finishing stage, which is irreversible. There can be pinholes in the pre-treatment stage, which will be irreversible. So basically, it's like nobody takes a risk in textile processing.
Understood.
And that is one of the reasons this is the most high entry exit barrier sticky businesses.
Okay. Yeah. And it won't be just for one t-shirt, right? It'll be like 10,000 t-shirt unit, 1 million t-shirts they'll be doing. So if a chemistry has gone wrong in one process for making that 10,000 t-shirts, everything is spoiled.
Precisely. In fact, the kind of machinery which has been installed now, the continuous processing of textiles, you know, it's like these are being processed at 10,000 meters in 1 hour and things like that. And that's the reason companies are not able to even decide to change. It's not nothing like batch wise now. Things are getting into a continuous process. So by the time they detect a problem,
Yeah.
there'll be heaps of fabric which is not workable enough to use
Right.
that way.
Right. So that's about textiles. I'll come onto it later
Yeah.
too. On FMCG, so you recently went into FMCG very recently, and despite that, nearly 40 to 50%, correct me if I'm wrong, of revenues come from the FMCG segment. It is more stable. It's not dependent on the textile, because textile is it's very dependent on geopolitical situations. Like Bangladesh, something happens, India spikes. Then Bangladesh comes back, India dupens. So FMCG more stable. What is the reason, the main reason why you went to FMCG? Is it because you foresee that textile segment will be stagnant? That's why you're going into FMCG. What is the thought process?
So as such, textile is not stagnant at all,
Okay.
and we are present in almost all the textile hubs of India. We are almost in almost 70 countries globally also.
Okay.
So it's not about getting into stagnancy at all. There is a lot of overlapping in the chemistries.
Got
So
it.
our business model is we either offer more products to the same industry, or the chemistries which we are producing, which is esterification, phosphonation, sulfonation, polymerization. These chemistries, if they have application in the other verticals, we are offering these kinds of products to those new ideas in the verticals also. So let's say talk about cleaning and hygiene, as you mentioned. Cleaning and hygiene, as it speaks up, is for the cleaning and also like laundry work and cleaning of fabrics and other things. Ultimately, this is also connected with the pre-treatment process of the textile business, which we mentioned. So there is a great overlapping in the chemistries.
Okay.
So that had also excited us to venture into that businesses. And interestingly, this is also done in the same fungible capacities as such. So with the same cost, variable cost, we can expand to the new businesses. Of course, we have more product lines there. Our plants are FDA, because in cleaning, hygiene, detergents, you need to have the plants, FDA plants, which we have.
Okay.
So we are providing a lot of solutions to that business also.
Okay.
And that is also a very perennial business, as you mentioned about.
So let's say tomorrow textile demand dampens, and you find a lot of stagnant capacity in terms of textile because the chemicals are not moving. So the 100,000 odd metric tons per annum capacity that you have, you can use it for FMCG purpose as well to manufacture chemicals for the cleaning products.
Absolutely.
Okay.
So not only for this business, FMCG cleaning and hygiene, but also for the other two divisions, which we are doing, is the water treatment chemicals and the specialty oil and gas chemicals. So these are fungible capacities, and these same products are made for in the same capacities and the production which we have in Ambernath and Navi Mumbai and Malaysia also.
Okay. We've come across many chemical companies that they put up a plant expecting a large sizable demand that's going to come their way, and it does not, it just operates at 10%, 20% capacity. And sometimes a plant is there, the demand just evaporates from the market. For example, there was a phase 2 years ago that dyes and pigments, there were listed companies in the dyes and pigment space operating at 20%, 10% capacity utilization, and the promoter just didn't know what to say on the con call. It was very difficult phase for them. We were invested in one company actually during that phase. But then now it recovered. Now textile industry is up anyway. But it's good to hear that the capacities are fungible. Like you can use it for other purposes too.
Yes, and also if I can add on that lines, the industry which you spoke about is more of a commodity, China plus one strategical businesses.
Yes.
Our business is not China plus one. It's not a commodity business. Rather, I would like to mention that our products are not COA driven businesses. Technically, we do have COAs, but it is more run on the performance of the products.
Okay.
So it's not like a paracetamol or an API. It's more of like a homeopathy solution where the consumer is not bothered about the cost of the chemical or the homeopathy thing, more than what kind of results they can get with it. And this is the kind of the business where we are. So we are not into those commodity segment at all. So our businesses are generally very important. We also never lose a customer actually. And because it's a very high, like I said, it's very high entry exit barrier businesses where we are.
Okay. The other chemical companies I speak to, there's not much R&D that they do. Is the fact that you enjoy high margins, like if I'm not wrong, your net margin on a standalone basis, taking off your subsidiaries, is close to like 26%. The most recent one when I calculated. and it's like 22 or 23% on a consolidated level, including all the subsidiaries and the standalone. And that is huge, I would say, in chemical sector. Because chemical sector, I've seen somewhere between 5 to 10% net margin, 20% maximum operating margin. And again, these are companies, because India, I feel, are not there yet into very specialized chemistry. Because a large company that's in Gujarat, Surat, all these areas, we see companies doing HCl, something to do with chlorination. And we've got large players like Aarti doing dyes, pigments.
Right.
So in your case, is it that you provide specialized chemicals, like let's say a client from Europe who's doing textile manufacturing comes to you and is like, boss, I require for this process this chemistry. Do you sell the same chemistry that you sell to another customer, or is it like customized for that particular client that has come from Europe?
So basically, these are all tailor-made solutions.
Okay.
And also there are a lot of variables, like we have to check the water quality of the customer, check other variables which have been used on that lines. Of course, the make of the machine, the process flow of the machines, and only after that we will be able to recommend our products to the particular customer. Now, taking up your previous query about the margins, so rather than only for the current quarters or what you mentioned about, I would like to mention, if like we are listed for last 55, almost 60 quarters by now, more or less. And if you can also go through our, like you must have gone through our financials.
Yes.
Any of the quarters on the last 55 or 60 quarters of being listed, our EBITDAs have always been minimum 17% in any of the quarters.
Okay, even during COVID?
Even during COVID, yes.
Okay.
And and in the last 13 years, there has been a great CAGR of almost 28 to 30% in PATs and EBITDA numbers. We are still debt free, things like that. So it will, the way I look at it is, if we were doing any kind of, if these products were like a Me Too kind of a product or something like that, these kinds of EBITDA margins is definitely not been achievable, generally speaking, let's say for that. So this is the differentiation where we are. We are not into the commodity chemicals, we are into the high-end specialty chemicals. So in 2011, I would like to take you on the R&D portion where you mentioned about.
Yes, yes.
So after the IPO in March 2011, within 3 or 4 months, we deployed that IPO proceeds in investing in a European founded company in Malaysia, which is known as Biotex, and we invested in that company, and that has been founded by French and Germans. They still own 28% of the company even now. And this is, they are spearheading in R&D. And so basically, like I also mentioned, this businesses has been come from Europe. The entire textile has migrated from Europe to India and Asia. So that was the time when a lot of textile chemical companies from Europe and USA had come to Asia and India. And we have been always working through them backdoor and supplying to them a lot of specialty chemicals. So this technology of the Europeans, which we got from 2011, has helped us to be much ahead of the other chemical companies in India. So they spearhead our R&D even now. And that is the reason we have been able to customize the solutions, provide a lot of excitement to the consumers, have the entire spectrum of the product lines. And that is the reason, yes, that is the reason why we were able to be much high in sustainability as well.
Okay. How much did you raise in 2011 IPO?
Oh, that was different time. It was a very old time. So that time we raised almost 30 crores. That was the time.
Okay.
And since then, the company has doing phenomenally well. Even the subsidiary which we acquired about, and even Fineotex, as you might have seen the growth rates, it's still,
Yes. And subsequent question, that you said they own 28%, the Europeans and Germans who co-founded the Malaysian unit. So the Fineotex Chemicals owns the other 72%?
72%, yes.
No, like promoter does not own separately behind
No,
that.
no, not at all. Everything is in Fineotex, 72%.
Great, great. Then you talked about the Malaysian unit. Now I want to understand about your manufacturing units. I hear Abhirnath in your presentations con call, but I do not know how many plants do you have?
Yes.
Which chemistry is produced by which plant, and how much is your capacity? After this, I'll ask about your Capex.
Excellent. So when we began in, we were at the Navi Mumbai facilities where is the production still on. That has been our main till before. So in the first quarter, the most unpredictable quarter of COVID-1, 2020, we were on the onset to find a good place for further expansion of the product line. So we acquired this company in Ambernath, which got commissioned by 2022, and that time the capacity there planned was 20,000 tons. Eventually we ramped it up, and now it's almost 60,000 tons in the new plant Ambernath I'm talking about. So together we have like in 2020 it was like 42,000 tons, then it became 62,000, then 81,000, and then it became 104,000 tons. And everything, the new expansion from 42 to 104, the 60,000 tons is done at the Ambernath plant as such in the last 3 years. So which was done in stage wise.
Got it, got it.
So that's our main area where we are producing right now.
Okay.
At the same time, last year we acquired a land and building from Huhtamaki, which is also in the vicinity of this plant itself, and that's much bigger plant, right? It's more than 7-8 acres almost, and that is being under commission now, and where we are also planning to begin our production capacities within this calendar year 25.
Okay. So you've got like 104,000 metric tons per annum that is currently functional.
Yeah.
Then you're adding the new 7 to 8 acres that you acquired from another company. You're planning to put a plant there. So what is happening? Like site inspection, land permission, what's happening there? Or the plant has come up?
Yes, the plant is coming up, and of course the permissions are, it's a long process these days in India, setting up of a specialty chemical plant.
Yeah.
So we are on time on that. We had expected that by the calendar 25 we will begin our production over there. That is on time as of now. So we'll be starting up the production facility. The machines are ordered, they are in the installations, erections, and the land labeling and other things have been completed.
Okay.
Yeah.
Okay. Then, so you basically buy these chemistries from India, maybe from China, basic commodity chemicals, process into specialty chemicals, sell it to customers in Europe, US, all across the world, and in India, at much higher margins, because your chemistry is what adds value. Okay. Now, tell me one thing. You've seen, if coming back to the textile segment, we're seeing a lot of sentiments about Bangladesh, geopolitical situation, and there was the garment exports stagnated for a bit. Now they're catching up. And secondly, on China, we're seeing that there was a negative sentiment towards China. Then Joe Biden came, it got better. China regained the manufacturing prowess position, and now Trump is back. So during these maybe last 8 years, are you seeing demand tangibly shift from China to India, from Bangladesh to India? Are domestic players coming to you and like, boss, we need chemicals, we're giving you orders because we've got new orders? Is that happening to you?
Oh yes, absolutely. In the last 3 years, as you might have also seen, most of the biggest textile companies in India, they had a huge capex expansion.
Yeah.
And that has helped them to ramp up the capacities. The demand has increased for sure. But however, coming to the shifting of the demand from geopolitical situation, let's say from Bangladesh to India, I would rather say that we are present in Bangladesh as such. We have an office, our team, and everything is there already in Bangladesh.
Okay.
And that's one of the important areas also. Having said that, I would not, agree to the point that the demand is shifted from Bangladesh to India.
Understood.
It has only on a temporary basis, it looks like, because eventually most of the buying houses or the Walmarts of the world, etc.
Yeah.
At some point of time, the price is the most important thing: price, supply, quality. And the labor cost in Bangladesh is definitely much lower than India. And textile processing moves where the labor cost is the minimum. That's the way it happens always. Plus, Bangladesh is also very open in terms of import duties, and a lot of investments from USA and Europe is already there. And I would rather say this can be a temporary time where the Indian market, textile market, have got certain boost in a couple of quarters.
Yeah.
But I think if Bangladesh will eventually catch up, the demand will keep going up as well.
You're absolutely right, because there was a temporary blip. Now it's back. The factories are operating at full capacity utilization. They're getting ready for the winter batch.
Yes.
And now everything's back to normal.
Absolutely.
So, but China, you're seeing actual tangible orders coming to you because textile companies are placing orders with you because they're seeing tangible orders?
So if I want, can I add on the other
Sure.
parts also? I would like to mention, like in the oil and gas sector, if I could touch up that topic now, we are already present in oil and gas segment where we produce our solutions for the oil and gas. Now we were talking to some of our USA customers on that,
Okay.
and they are like $20 billion companies with whom we are trying to get associated in. We have already began actually, and they have the procurement from China, and there has been a very clear message to them now that you need to buy more from India and
Okay.
reduce the Chinese supplies as soon as possible,
Wow.
especially in the last 2-3 months after the Trump
Yeah.
regime is back.
Yeah.
And if I talk to you in more details on that, they were mentioning that currently they have procuring only $100 million of chemicals from India. The targets is minimum $500 million only for the oil and gas chemicals, and which gives a big vacuum because there is not enough of capacities, there are not enough of takers in the oil and gas specialty chemicals to manage that kind of a gap increase. Eventually, I would definitely agree to that the Indian specialty chemicals will be growing more, especially in the oil and gas for the US demand, which has been catered till now from the Chinese manufacturers. So I will agree to that part from the Chinese point of view.
When you said oil and gas, I thought you supplied to like the local petrochemical companies, like Reliance or something. But you supply to the US companies too, US, Canada, that region.
Oh yeah, we supply to
Okay.
Eastern Europe, we supply to US companies, and we are supplying a lot of, we do makes certain solutions in production chemicals for drillings, for factoring, cementing. These are the various processes in oil, upstreams and downstreams, midstreams as well. And we offer to the Middle East. We have been participating in a lot of oil and gas shows also. So this is a division which has picked up in the last, let's say 1 year or so, and we are very excited with the kind of traction we are getting on that.
Okay. What is capacity utilization at the moment?
See, basically the optimum level, because we have more than 1400 SKUs,
Yeah.
it is very necessary, and all the products are made in different batches, and this production cycle differs from 2 days to 2 hours. And the demands also, sometimes there are orders for more of cotton products, sometimes there are more orders for polyester, so these are different chemistries which we have to take care of. So the optimum level of working should be 75%. That's
Okay.
what we are looking at always.
Okay.
In the last couple of quarters, I think we have reached 64% broadly, which still gives us room to always utilize furthermore. But it is always, we always prefer to be working at 60-65%, so that in case you get much bigger orders of products which have a longer production cycle, we can cater to that.
Got it. Got it. What's happening in this world right now, which is very exciting, is SpaceX. So they have come up with their own astronaut suits, which is much lighter than what NASA had developed back in 1980s and 1990s. And it is fully made up of technical textiles.
Yeah.
The chemistries are aramid fibers, Normex, and these are a couple of the materials that they use. Okay, and they've got different properties, like one is
Yes.
fire resistant,
Functions,
one is
yeah.
waterproof, one
Yeah.
keeps the temperature under control. Like if they're in the shadows, it keeps your body warm, and
Yes.
if the sun is hitting directly at you, it keeps your body cool.
Yeah.
So these kind of properties.
Yeah.
So technical textiles is a
Thermostables.
huge space for India, and they have done like 10,000 crore PLI incentive announcement, meaning
Yeah.
PLI scheme they came up with.
Right.
Incentive is not announced
Right.
yet. So it's a huge space for
Right.
India. India
Right.
is focused. So where do you see technical textiles going, and how is your company playing into it?
Well, rightly said. Technical textile is the most in thing right now, and in fact, India is just building up its capacities on that lines compared to Brazil and other countries where technical textile is already very prominent. Now, from Biotex point of view, Biotex has been an early bird into the technical textiles, offering solutions like water repellents, and there are various kind of sustainable water repellents, oil repellents, flame retardants. During the geopolitical situations, there are big demands for blood repellency for the military wears, and of course antimicrobial, as we have experienced in the COVID times, where companies and consumers are asking for antimicrobial finishes, water absorbent and resistant as well. So these are called the technical textiles, where the functions are given to the textiles by the use of chemicals.
Okay.
So very importantly, I would like to mention, these are not mechanically treated. These functions are not given mechanically. It's not machine work.
Understood.
It's all chemicals. Now that's the most exciting place where we are. and we are quite early birds in those businesses, and this is catching up very rapidly. And we are very excited about the kind of drive which is in India we have been seeing. We do take part in a lot of exhibitions of textiles globally, in India also, and where we are demonstrating and exciting the customers. The kind of demand which is coming for this is also keeping this sector more fancy about it, and a lot of demand has come on that lines.
Understood.
Yeah.
Great. And last question on this topic, technical textiles. If you said 3 rupees is the chemical contribution of 100 rupee t-shirt,
Yeah.
but on a technical textile item like a spacesuit, I'm going very vague about this,
Right.
spacesuit or a parachute where technical textiles is used, what would be the contribution of the chemicals? Much higher?
Well, if you take this example as 100 rupees t-shirt and a 3 rupees chemicals, the cost of a technical fabric or textile itself is 1,000 rupees.
Yeah.
So even if the percentage is same, it is still 10 times higher than the
Right.
the absolute number compared to the traditional chemicals which have been used in cotton and polyester and things like that. What is very important is that this is the area where the consumers are ready to ready to give out a better, they need something much better. The demand from the consumers is on more performance and higher performance and something more advanced. And Biotex and Fineotex being one of the oldest textile chemical companies and in this industry, we have been able to adhere and meet the customer's demand, and that's also one of the important areas of our textile vertical.
Okay.
Yeah.
We spoke about the future. Now, the last 4 years, you've seen good growth. What were the main reasons? Like after COVID, there was certainly a change
Yeah.
in things. What is the reason for this?
So there are a lot of factors which led to substantial growth in last 4 years. I would like to mention numerous points on that. One is apart from the new plant which we added and the new capacities, what was very important is we had done a lot of factory audits, marking to the standards of the FDA, getting all the German certifications, the European certifications, American certifications for the product qualifications, which is used by the end users and the Walmarts of the world, and nominations also which we have worked on. At the same time, in the last 4 years, we have done a couple of tie-ups with international companies, European companies, where we are able to provide and excite our existing customers with more number of solutions and product lines. So this is one. Also, we have invested a lot on the product certifications.
Okay.
Now, product certifications is something which is very important in our businesses, and also worked onto R&D. We added more, invested a lot in the technical manpower, technical services. At the same time, we have invested a lot in the exhibitions and promotions. Globally, we have participating and things like that. So there are a lot of factors which led us to, great growth in the industry, in the water treatment, in the oil and gas, FMCG, cleaning and hygiene divisions, and also the main specialty chemicals also for the textiles. These were the four areas where we have.
That's what helped you grow.
Yeah, absolutely.
Okay. All right. And before 2020, your growth was slightly lower than today?
We can say in a way that in the last 13 years of being listed, we have a growth of at least 28 to 30%, 13 years CAGR. So there has definitely been growth even up to 2020. However, the recent last 4 years, there has been a growth of more than 40% CAGR. So if you compare, the growth in the last 4 years has been more prominent. Also because the management levels, we have hired a lot of great manpower, technical experts in the company on the top management levels, whether it's in oil and gas, whether it's in FMCG, or whether it's in textiles.
Okay.
So the business heads are also from very professional backgrounds. And a lot of professionalism has been added in the last 5 years in the company, and that is also one of the reasons why you see a great jump in the performance of the company.
Understood. Last question: when did you go into the FMCG business? Which year?
That was 2021.
Your growth, your future growth, from what conversation we had in the last 30 minutes, first expanding capacities for the existing chemistries,
Yeah.
looking into new chemistries, because after textiles you came into oil and gas, water treatment,
Cleaning and hygiene.
cleaning. And the other is you recently raised a huge fundraise. In 2011, during IPO, you had raised 30 crores.
Yeah.
Preferential this year you raised around 342.
Crores. Yeah.
342 crores.
Perfect.
So if I were to, this 342 crores, is that going to be used for growth, because you're not going to pay debt because you don't have net
Yeah.
debt is zero. So what are you going to do with that 342 crores?
So I would like to mention in a way that we have always been debt-free company. There is always cash on books. In the last calendar year 24, we have invested almost capex of almost 100 odd crores, which
Okay.
was in the new Ambernath plant, which is under commission. At the same time, the commercial offices also, which we have invested in. It's an outright property in Andheri, and that's the investment we have done. Even now, we have sufficient amount of cash on books, and this is particularly for the inorganic acquisitions, so which we are already looking at since a while.
Okay.
So now, from the 342 crores, the 45 crores is from the promoter contribution.
Like you put warrants,
Yes,
right?
absolutely. So the 45 crores from that, like 15% of that is from the promoter itself. So when we got listed, the promoter stake was 61%,
Okay.
and 39 was diluted. Right now, the promoter stake is almost 62, 63% broadly, and that has been done by creeping in and things like that. So that the 342 constitutes of 15% of 44 crores from the promoter. Yeah.
And but if okay, anyways, if you put 15% of it, still it's being diluted further, right? Out of 342 crores, if you're only putting 15%, then promoter
It will affect by
holding-
1%, but
Yeah.
in fact, still we will be higher than from where we started doing the IPO.
Oh yeah, absolutely.
Yeah.
That's true. Then, so 342 crores, you'll be looking at inorganic growth, like acquiring other company, maybe competitors, maybe upstream, downstream companies.
Yeah.
Like what portion of it? Like the entire 340 crores, are you still exploring? Are you just waiting for the right opportunity? What's happening?
So I would like to mention that in 2011, like I said, that was our first experience in an international maiden acquisition. So we are very confident of the management, and that things have went very well. So the management has the enough confidence to go for another acquisition, which we are looking at. And yes, there is a lot of opportunities which are available in the market right now, and I think this is the right time for Indian specialty chemical companies to increase their presence globally and buy some companies in organic acquisitions in the specialty. So one thing is very clear: the synergy has to be very clear in our businesses. We will not like to get into chemistries or product lines or verticals which we have not handled.
Understood.
Yeah. So this is the strategy which we have for that.
I were to summarize
Yeah.
it, 3 areas of growth.
Yeah.
One is do more capex, increase your capacity, like the one you're doing with the 7 to 8 acres that you've bought. Second is the new chemistries that you're exploring, like you from textiles you went into oil and gas and into FMCG. And third is inorganic growth, where you plan to acquire a company. You are sitting on good 320, 340 crores of cash at the moment,
Yeah.
and looking to acquire a company to take the company further
Yes.
in terms of growth.
Absolutely. And the choice of the company which we have has to be totally R&D driven company. As you already know about that, Fineotex and Biotex are all R&D driven companies. And this is the second year renewal for the NAB. Our labs have already been accredited by NABL, which is the highest standards of a lab, R&D lab, which can happen in India. So we are very much clear, because R&D is one of the most important essentials to have a specialty long-term profitable business.
Okay.
And that's Fineotex is an example of that as well. So this is the synergy which we will be looking at.
Excellent. Great conversing with you, and company has done well. I studied my maximum about the company as I could, and I really congratulate you for
Thank you so
coming
much.
this far, and all the best for your future.
Thank you so much. Thank you.